Good morning and welcome everyone to the Money Control live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Talk about Indian equity markets, well, likely to start at least on a muted foot to the week which kickstarts Q3 earnings season. It's rather a muted start for the rather eventful week coming in. GIFT Nifty indicates a flat start for Indian equity markets above the 21,750 mark. US markets end lower. Also, there is also, we're looking at US stock futures, which essentially were a little change after S&P 500 snapped a 9-week win streak. Asian markets started on a muted note, on guard for inflation and earning test. 4 IPOs worth around 1,000 odd crore would be hitting in Dalal Street this week for fundraising with one listing. In terms of FNOQs, well, FIIs have been the net buyers in index futures and bank nifty futures. Along with that, there've been sellers in the bank nifty futures, but buyers again in index option and sellers in stock futures put together. Talk about FNO ban. What is new in the ban, what rather still remains in the ban is Balrampur Chini, Chambal Fertilizers, Delta Corp, Escorts, GNFC, REX, India Cement, National Aluminium Company, SAIL, Z Limited. What comes out of the ban is Hindustan Copper. Nifty PCR 1.08 compares to that of 1.22. But let's get going with the top recommendation strategies and the immediate support and resistance level for Nifty and Bank Nifty. And to take the discussion forward, we're being joined by Prashant Sawant. Morning there, Prashant.
Good morning, Nickey, and good morning to all the viewers.
All right, it looks like a very eventful week. At least the earnings season will kickstart from Thursday onwards with Infosys reporting in the numbers. Prashant, what do you suggest for the immediate levels, both for Nifty as well as Bank Nifty? Do you think it's going to be a rather good week coming in for the Dalal Street?
So I think, Nickey, yes, if I were to look at the Jan futures, we closed approximately around 21,800, precisely 21,793. So I think we are heading towards 22,100 on futures. We already tested 22,000 once in Jan futures. So I think 22,100, 150 would be the next level I'm looking at. And on the support side, I think 21,600 is extremely important. As long as it holds, any dip can be bought. I'm slightly more bullish on Bank Nifty, provided the one stock that I'll be watching would be HDFC Bank. The day HDFC Bank closes about 1,700. That would be the day that I would start watching Bank Nifty more seriously. Unless and until HDFC Bank is below 1,700, I think Bank Nifty will continue to struggle. But overall, positionally, I think the stop loss for Bank Nifty, which closed around 48,400 in futures, is 47,800 positionally. And from a short-term basis, the round number of 48,000 holds a lot of importance. I think positionally, we are heading towards 49,000 in futures. In spot, might take some time. But in futures, definitely 49,000 on Bank Nifty and 22,100 on Nifty looks very much possible in the week ahead.
Prashant, big upgrade coming in for Sula Vineyards. CLSA has revised the target price sharply from 571 to 863. Calls it sour grape case no more, and essentially has upgraded the counter to buy. How does it look essentially on charts?
So I think, Nickey, one thing which was evident 4 or 5 days ago was the volume, and I'm not sure nobody would have noticed it because we see it now after the news. But I think the volume was evident, and now even in the pre-open, it shows around 6% up at quoting around 585, 590. So I think I would not chase the stock, but if I have it in my portfolio, my suggestion is to trail with a stop loss around 560 and hold a position for targets around 600, 610. But I would not chase it. Any dip in the stock to levels around 530, 535 for any reason going forward would be a great buy.
Also, I'd like to chat about financials. Essentially, there is a report which is coming by Macquire where it's upgraded Axis Bank to outperform from neutral, it's downgraded SBI to neutral. There is a downgrade even for BOB. There is a downgrade for BAF, Bajaj Finance. Along with that, SBI cards. So the only pocket where it is bullish right now is Axis Bank. What do you make out of it ahead of the earnings season?
So I think we are near a resistance for sure, but we are breaking out of a narrow range. So my suggestion is, if you happen to look at the pre-open, I think Axis is quoting positive and quoting around 1145. So my suggestion is those who are having position can keep stop losses around 1130, 1130 zone, and even you can look at buying with the same stop loss. Your risk is around 1%, and keep it as a spot closing stop loss 1130, and look out for targets around 1155, 1160. Overall, the stock looks good and positive. The reason being, volumes are picking up with the price, which shows both are in sync.
All right, those are the recommendations coming in. Prashant, essentially, what are you looking at where the risk-reward ratio typically seems to be a bit interesting?
So I think, Nickey, one stock which I would recommend the viewers to have in their portfolio and is CSE, with a disclaimer that I have recommended it to my clients as well. It looks extremely bullish for the year going forward. And my stop loss would be 125, 120. You can keep 120 as well on spot closing basis. Look out for targets around 165, 185. This would be a positional portfolio pick for the next 6-7 months. And on a short-term basis, from a trading basis, I think Biocon looks good with a stop loss at 278, the targets around 300 plus.
All right, Prashant, we're going to come back to you in just a jiffy. First, let's address the market open. 21,700 mark is what we're looking at. It's a flat start, like we anticipated, to the week, which is dominated by earnings. Let's talk about Bank Nifty, just to see where's the trend essentially stacking up for that one. Well, Bank Nifty, 0.25% lost for Bank Nifty in early deals. So clearly, some amount of losses coming in for Bank Nifty. Remains to be seen how the momentum now stacks up for Nifty through the course of the day. Whether we're looking at some course correction before the earnings could set in remains to be seen. Mid cap and small cap index, let's pull that up. Well, mid cap index, at least some amount of gains coming in for that one, and small cap index too, level of outperformance there with a mark of around 0.5% thereabouts. Well, let's also pull up of, PSU banks. There's a bunch of downgrades which have come in from Macquire essentially. And look at that. We're looking at cuts in the early deals to an extent of 0.75% thereabouts for PSU banks. SBI and Axis Bank is what I'd like to look at before we address in top gainers and top losers of the day. Well, State Bank of India, it is a lackluster start. And Axis Bank, where there is a bit of upgrade coming in, well, that's the one we are looking at, some positive momentum building in up there. But let's look at top gainers and the top losers of the day. Okay, Eicher Motors, Titan, BPCL are some of the top gainers that we have. Adani Ports, ONGC and L&T. Of course, let's address also the stocks and news that we have. Titan is, of course, the big one that we'd want to talk about. Another quarter which looks good for Titan. The revenue is up by 22%. The jewelry business has seen growth of 23% as compared to the expectation of 21% thereabouts. Watches business has also seen an uptick by 21%. A bit of decline coming in on the eye care business, but not a significant contributor overall to the operational performance of the company. Jewelry is where most of the margins come in from. And we're seeing a good amount of uptick there. So, clearly a good start coming in for Titan. It's also clocked in 24% growth in emerging business, and CaratLane, the new acquisition, has recorded in 31% growth in the quarter gone by. Well, so Godrej Consumer is another one. The company has said that the operating environment in India in Q3 continues to remain similar to that of Q2. At consolidated level, organic Godrej expects to deliver mid-single-digit volume growth. It expects to clock double-digit constant currency sales growth. CLSA has maintained the sell call on this one, and the target price of 936 rupees as compared to the levels that he's looking at, 1100 thereabouts. And losses to an extent of 5% coming in for Godrej Consumer. Clearly not a good Q3 update. The story still remains lackluster for the entire FMCG basket, if we were so to say. But Marico, look at another one. Before drawing in conclusion, Q3 was rather a weak quarter coming in for Marico as well. Well, look at the rural lag continues, and the company has recorded in Q3 revenue, which has declined in low single digits year on year. International business has delivered mid-single digit on constant currency growth basis, and the operating profit of the company stood in low double digit. So that's a bit, and also taking a bit of hit there. 3.5-4% wiped in early deals for Marico as well. Nykaa, where it also talks about the impact on discretionary consumption due to short-term pressures. Of course, it's also spoken about the NSV, the net sales value of the vertical growth of around 20%. But overall, it underlying order volume growth is healthy and consistent. That's the key takeaway. The company believes that BPC growth ahead of industry growth. So overall, if you look at the performance coming in by Nykaa, we're looking at gains to an extent of 3%. Thereabouts. But I'm going to quickly go back to Prashant before I address in more stocks and news. Prashant, we're seeing some amount of losses clearly creeping in for Marico and Godrej Consumer Products. What do you make out of these two counters? Do you think they're good bets essentially for a little more long drawn period, or would you stay away from the counters?
So I think, Nickey, if I were to talk about Marico first, it has been a very strong underperformer, and as expected, the rally was sold into. We are now at a major support. The support happens to be somewhere around 510, 515. So the risk is low. Those who want to accumulate can accumulate it. And those who are holding, you need to keep a stop loss around 515, 510 zone. As far as Godrej Consumer is concerned, I think it has shown a very strong move and it is nothing but a very regular profit booking. So those who have position can trail with stop losses around 1150. And if it happens to trigger, you can book your profit and stay out. Wait for the next dip to levels around 1120, 1125.
All right. What do you also make out of something like Titan? It's another strong quarter coming in for Titan. Of course, we saw the same quarter in Q2. It was a strong show. But Titan and the likes, Kalyan Jewelers too, for that matter, jewelry business seems to be doing well, much higher than what the street was estimating.
So I think, Nickey, if I were to talk technically, Titan has been following a very strong pattern of taking a dip to the 20 moving average and then giving a good bounce. So I would wait for the next dip. This is currently at a resistance, and it's purely the move today is based on the quarter numbers reported. So I think we can hold it with stop losses around 3,725, 730. But I would not be keen on adding any fresh positions at the current level.
I know we spoke about Sula Vineyards, Prashant, but it's an 11% uptick there. It's clearly the upgrade has come through. And how? How are you looking at it after the current momentum that we've seen? Would you kind of be a little more cautious, or you think there's more steam to the rally for this one?
No, I think so, Nickey. One thing which I always track with the price is the volume, and the volumes have been extraordinary on the counter for Friday and as well as last week. So I think those who have it, for sure, I think it's a very good move. You need to make the most out of it. The current price, you can look at trailing around 600 levels now. You can raise the stop loss from 550, 560 or to 600 and hold it. Even 595 would be a good trailing stop loss. It has broken out of a range, and typically these kind of counters, when they move, they tend to give a good move. So you can make the most out of it by trailing. But I would not recommend any fresh buying at the current level. Better stay out and wait for the next dip.
All right. You're going to be waiting in for the next dip clearly for this one. But Tata Steel, and another interesting one that I'd like to address in. A bit of momentum seen. The production volume is up by 6.4% for this one. And the Netherlands production volume, however, is down by 23%. UK volume has seen some amount of flatter strength. Thailand production is flat. So it is the Indian business which is doing well and continues to do well for Tata Steel. The delivery rather is up by 3% too. So that's the key takeaway. Netherlands also volume down by 7.9%. UK business is acting no different. And Thailand volume down by 13.8% when it comes to the overall the sales volume per se. PSU Bank update there. Bank of Baroda has given in the Q3 numbers, where it's spoken about the global business doing well to an extent of up by 10.68%. Of course, we're talking about the year-on-year numbers for the entire bank, and the advances of global also up by 13 or 14 odd percent. Deposits have seen 6.34% uptick, and domestic advances too have seen some amount of growth there. 13.4% is what we're looking at. Essentially, not looking at a very great start coming in for Bank of Baroda. We are looking at some amount of downgrade which has come through. Union Bank also has given in the Q3 updates, but PSU right now, after the recent run-up that we've seen, remains to be a little bit patchy and needs to, perhaps given more earning growth to justify the kind of run-up that it's seen. But Ambuja Cement, Prashant, along with that ACC, there's a downgrade which is coming for Ambuja as well as ACC. What do you make out of it? Would you suggest buying the counters at this level?
So definitely for Ambuja, you can use the news to buy. It looks in a very strong pattern and the dip would be a good level to enter. Currently, it's quoting around 538, 539. I think a stop loss around 525, 528 would be a good risk to reward. And you can look at zones around 555, 560 on the counter. As far as ACC is concerned, I think you need to trail. It's a little bit stretched. So here I would not recommend a fresh position. Those who have it can trail with a stop loss around 2350, 2355. Try to book out profits, but Ambuja can be a good buy at the current levels as well.
All right, Prashant, thank you for those views. We'll just leave it at that, and thank you so much for taking out the time and joining us this morning. Let's navigate our conversation now to Mayuresh Joshi, who's the head of equity research, William O'Neill, India. Morning there, Mayuresh. How are you doing?
Morning, Nickey. I'm doing all fine and hope you have a fantastic 2024 full of good health, wealth, and prosperity. All your viewers and moneycontrol.
That's sweet. Thank you and wish you the same. Mayuresh, let's start off with what do you make out of currently cement space? That's where the downgrade has come in for both ACC as well as Ambuja. It is an election marked year. Demand seems to be, CLSA at least says that the demand growth within the sector seems to be taking a breather. The capacity expansion is expected to remain strong, but the cost tailwinds are expected to play out further. But on back of that also, despite few of the tailwinds, it's gone ahead and downgraded both Ambuja as well as ACC. What do you make out of the entire space at this time?
So, Nickey, frankly, I think the earnings might be a little bit sluggish for the next quarter or two. But if you take a medium to long-term view for cement as a proxy to how the economy will probably grow, and the expectation is the economy will grow at a very healthy pace over the next few years. And obviously, the kind of capex spends that the government is doing on infrastructure, on housing, both urban and rural, affordable housing as well. I think all the elements that probably are there in place as structural drivers for cement growth over the next few quarters and years are in place. Our capacity additions a threat in terms of the overall utilization levels. A few of the capacities which had started a few quarters back, case in point, the integrated clinker and grinder facility of ACC at Ametha, as an example, the organic and inorganic growth in terms of what Ultratech is doing. I think even if capacity additions happen at a decent pace, the demand is also going to remain equally strong, which means the overall utilization levels should be above that 75% mark for the better part of the next financial year. And as private capex starts kicking in as well, I think this level will only go higher, which means better operating leverage for a whole host of cement companies. Obviously, the vagaries in terms of input cost, specifically how coking coal probably behaves, is obviously going to take an impact in terms of an absolute EBITDA. But as it normalizes over the next few quarters, my own sense is that with steady volumes and utilization levels, steady input costs, operating leverage should start getting played out on an absolute basis on forward-looking EBITDA and EBITDA per ton. So I think I remain constructive on this space. JK Cement, Ultratech Cement probably remain good actionables as far as the PS and RS ratings are concerned at markets within.
All right. Another interesting note, Mayuresh, which has come through is solar vineyards. That's where there is a good momentum which has also been seen, 11% uptick there in the early deals. Of course, there is an upgrade which has come through after the Cabinet Ministry and the government of Maharashtra essentially has reinstated the subsidy on wines produced and sold in Maharashtra for 5 more years. How do you read into the development for this one?
So positive development, and it's probably getting reflected onto the price. Having said that, obviously, I think the numbers have also been relatively better. Obviously, the kind of modes that Sula has as far as wines are concerned, and the expectations in terms of both their mid-segment and the premium segment also expected to start picking up and start garnering more volumes going forward. That is a highly margin accretive business as far as the core wine business is concerned. Now, as far as wine tourism is concerned, obviously, they've expanded their inventory space. And that should show steady state improvement going forward as well. So looking at dynamics, the recent announcements that the government has probably done, obviously it aids a lot of the balance sheet growth that the company probably looks at. And therefore, I think from a numbers perspective, I think the numbers should show steady growth going forward. A large element from a price perspective, largely captured in Nickey at this juncture. So I think the earnings henceforth will probably be a new re-rating factor for Sula Vineyards as far as price action is concerned. It's not an actionable as we see it at markets with data. I think the price move has been too sharp over the last few days and weeks. I think it captures most elements in terms of forward-looking numbers, at least for an FY25 perspective, as well as the recent announcements that the government has done. So I think fresh investors should probably wait for declines on this.
All right. The other pocket which I'd really want to talk about, of course, we've hit in most of the sectors right now which are in news, but another one which I think needs a bit of, long discussion there is FMCG. It just fails to perform for another quarter. Looks like it's another dull quarter in offing where the volumes are expected to remain weak. Rural growth is expected to lag. Godrej Consumer and Marico, both of them reported in their Q3 updates, which don't really look very encouraging. The stocks are down. How do you view the entire space in terms of valuation, and what's your pick within the sector?
So, Nickey, valuations for the space have always been at elevated levels. Obviously, I think the kind of cash flows that these companies generate, being fast-moving consumer good companies, have always been very, very positive. However, I think valuations being elevated for the reason of their growth probably sticking around in good times or bad continues. But I think a large element is a mix of both factors for these companies. And as you rightly pointed out, volumes is the basic moot point on how FMCG companies will deliver. And we have obviously seen in patchy times or in periods where demand probably goes down, like we are seeing the last 2 quarters, a large part of the salience as far as earnings are concerned comes in from the rural market. Obviously, with deficient monsoons and the inflationary impact, rural discretionary spending has been on the back foot. And that is clearly going to get reflected in terms of lower volume growth for a whole host of these companies. Now, with lower volumes, obviously the push through that starts coming through is either rise in marketing spends and they have to increase grammage for the same price that they're putting forth, which means there is certain pressure as far as overall absolute volumes are concerned, and the EBITDA and the absolute EBITDA performance and the bottom line growth as well. Now, if you peg all these factors together, Q3 is expected to be sluggish as far as volumes are concerned, and a lot of commentaries are probably pointing that out. The revival will probably come through with better monsoons in this season as well. So I think there will be some hints in terms of volume recovery from the first half of the next financial year. And the markets will then start gestating how FY25 numbers, specifically from the second half of the next financial year, will start looking forward, assuming good monsoon playing out in the June season as we see. So I think sluggish numbers, valuations elevated for most companies. It has run up quite significantly along with the entire market. Any room of disappointment as far as numbers are concerned, as the numbers get announced, might probably mean that price action can be a little bit more damaging for these counters just because of the strength that they probably witnessed. What we'll keep on our watch list as far as markets with India is concerned, from an EPSRS rating again, has largely been stocks like a Tata Consumer from the space. And a few of the packaged food companies, because our take is that packaged food companies from a discretionary spending, the SKUs and the unit prices at which they sell across different markets might still hold out along the next few quarters. So being a little bit more selective here as far as the entire space is concerned, I think management hearsay and commentary will probably do a lot of nice action for most stocks within those stocks.
Mayuresh, sure, we've spoken about a space, FMCG, which continues to be an underperformer thus far. But do you also think that OMCs typically now are a pocket which are underappreciated given the kind of earning inflection that they've been seeing, every quarter change catalyst in terms, at least for 2024, the dividends remain fine, with the balance sheet remains fine, at least for HPCL and BPCL. What do you make out of the entire space? We have been waiting for re-rating coming in for these two, but how are you looking at it?
So I think for downstream companies, Nickey, I think the two key variables obviously are the crude pricing itself, and in the Indian context, the regulatory environment as well. Now, as far as crude pricing is concerned, a large part of expectations because of sluggish demand that we are seeing probably in the developed world from China as well is expected to remain in a range of 80 to 90. So as far as the refining margins are concerned, they should remain relatively stable going forward. And with the pipeline operations that they've probably got and the downstream operations, as the stability starts coming through, I think there is a value add in terms of the SOTP valuations that these stocks probably derive. The second element obviously is the government regulation. And as elections are nearing, and if there is an upside risk in terms of oil prices moving higher, with all that we are probably seeing in the Red Sea, so on and so forth, and probably breaking that barrier of 80 to 90 on the higher side, is there a pass-through that happens in terms of general elections? That obviously becomes a huge overhang for these stocks under consideration. But the third element is, if you look at an SOTP valuation, GRMs, as I said, expected to remain steady going forward. The downstream operations steady, assuming these prices. The pipeline operations with expectations that tariffs increases should obviously have a larger say in terms of per price valuation in FY25, FY26. And their cross investments obviously also matter, along with the huge dividend yields that they carry. Having said that, I think the overhang in terms of price action and the volatility that they carry, our take is that they can be good momentum stocks in markets. But structurally, I think they'll always be embedded with both these factors at play, which remain highly variable.
All right, Mayuresh, last question that I have for you in that case is, it relates to financials. Of course, for the lack of time, I would also want to discuss IT because Infosys is coming in on Thursday, but financials where, there is a downgrade which is coming on the PSU names like SBI, and on the upside, on the other side, there is an upgrade which is coming at least from Macquire, even at Axis Bank. It expects the bank earnings growth to slow down in FY25, and it's overall said that for NBFCs, EPS cuts are larger as the growth margins decline and credit cost is expected to normalize. They prefer in large private banks and remain cautious on PSU banks and life insurance company. Would you also concur with the same view?
So they can't paint the entire sector the same brush. I think what the recent RBI circulars have done is probably ensure that where excessive unsecured lending was happening, you will see cuts happening in terms of their tier 1 ratios, elevated provisioning, which obviously will take an impact in terms of earnings. The second element is obviously the rate cut scenario. So if one genuinely believes that there will be rate cuts in the second half of this calendar year, as that probably starts happening, there is a positive effect in terms of NIMs and spreads that starts getting played through immediately in the next couple of quarters, which is very, very positive for the entire ecosystem as a whole. Having said that, being selective in this space is something that we warrant. Obviously, I think what we look at in terms of different criterias, in terms of the leadership position, as far as our cancelling methodology is concerned, in terms of the return ratios, specifically ROAs and ROEs as far as financials are concerned, and the overall trajectory getting reflected in our EPS ratings. A few selective private banks, like an IndusInd Bank, as an example, do remain on our radars and our watch list. Even within the PSU space, Nickey, we remain a little bit more selective where all these criteria and parameters are concerned. Bank of India, Canara Bank remain on our watch lists and our research ideations as well. So I think the space should do relatively well over the next couple of years, but being selective is going to be important.
All right. With this, we'll just leave it at that. Thank you so much for taking out the time and having this conversation with us.
Thank you, Lee. Always a pleasure.
All right, so let's it's run out of time completely on the show. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for the rest of that day, stay tuned into moneycontrol.com and Money Control app.